Highlights of 2015, obviously the biggest highlight would be the fundraising, the renounceable rights issue we had we closed in August of last year. We raised approximately $650 million. We also engaged and continue to engage in a share buyback plan. It's a very simple proposition where our shares are undervalued in the market, and we're talking of discounts of up to 30 to 40% on book value. We think the best use of shareholders' funds is to acquire those shares, take them off the market, make existing shares more scarce, bring up earnings per share, and add value to individual shareholders. We paid off a bunch of leverage last year, largely tied to some of the asset disposals that we engaged in. So where we had loans on properties that we disposed of last year, we'd pay off those loans. And then obviously another big issue was the transition of leadership from our founder, really, one of our founders, Favour Williams, who's gone on now to serve as a junior minister in the Ministry of Finance, to our new CEO, Kevin Richards. So continuing highlights of 2015, starting with the Miami Loft. Units there remain fully occupied. Frankly, I wish we could just buy that whole building. I mean, it's really an excellent acquisition. It's located right in the heart of downtown, around all of the retail, sporting, hospital, financial, and other professional services, all located around that area. I mean, it just stays rented. It's an excellent building. Rentals continue and rental rates continue to increase year over year. We have very little maintenance issues, a fairly new plant. And as you know, we have a total of 15 units in the loft. When you look at our investment properties, value increased by 63%. From $950 million in 2014 to $1.5 billion in 2015, largely influenced by the rights issue that we raised that $650 million in. We increased our portfolio by about 9 fairly high-value units in South Florida. And the portfolio is approximately 2/3 to 1/3 split between residential and commercial properties. The commercial property largely here in Jamaica and is our Red Hills Road property. The rest of the property is residential properties in South Florida. Jamaica has gone from 62% in 2013 to only 36% of the portfolio last year, and accordingly the US has moved in the opposite direction, gone from 38% up to 64% last year. And again, we're overexposed to the US. We just think that market has a tremendous amount of growth potential. Denominating our assets in US dollars, I think, affords us some foreign currency translation gains when those net assets are revalued at current exchange rates, and I think that inures to the benefit from a comprehensive income standpoint to shareholders and indeed to overall equity. We think we've done more than a fair job in enhancing shareholder value with the capital that is entrusted to us. And we have plans, obviously, to build this business out and create some scale. So we come back to the market, and we think as well that the capital is there, and that smart money is looking for an alternative to government securities, because that market is clearly drying up. And so the idea is we're going to come back to the market for more capital and continue, hopefully, to enhance shareholder value accordingly.